the second chapter. It's a very simple, very easy-going chapter. Okay, so let us try to understand the meaning of, first of all, the analysis. What do you mean by analysis? Okay, and financial statements we know, and once we are thorough with the term like analysis, we will be going through what is the objective of doing the analysis of financial statements. Then by the end of the chapter, we will be going to the limitations as well, limitations of analysis of financial statements. These two questions were very important. Apart from this, we are definitely going to go through the various stakeholders and their objectives for analysis of financial statements. Apart from that, in the beginning of the chapter, we learn something about the various methods, the various ways to do the analysis, right? Let us start with meaning of financial statement analysis. What's the meaning? Let us understand that first of all. Analysis of financial statement refers to the critical examination. Okay, critical examination किसका करना है? That is of the financial information. Financial information कहाँ से मिलता है? That is in the financial statements like balance sheet and income statement. Okay, so it refers to the critical examination of financial information. How it is to be done? Let us see that. The complex information is divided into simple parts to yield the valuable relation either from the same statement or from different financial statements. Okay, whatever the information is there, that is always complex in nature, that is not easy to understand. So to have some valuable relation, okay, from the same statement or from different statement, what is our job? We simply need to divide that complex information into simple parts. And the process of establishing the relationship and interpretation of different components of financial statements, so as to understand about the operating and the financial position of the business is called analysis of financial statements. So this is what is about the meaning of analysis, of financial statement analysis. Like the data is already there. We just need to divide that data into simple parts so as to yield some valuable relations between the different components of the same statement or maybe the different statements. And the process of establishing such a relationship, okay, and interpreting the data therefrom, right, is termed as analysis of financial statements. These all things are done just to understand about the operating and the financial position of the business entity, right? That is analysis. We continue. Types or methods of financial statement analysis. Number one, okay, like there are two types basically. Number one is on the basis of the material that is used, and second is on the basis of the modus operandi, that is technique used. Okay, let us go through one by one. The material used. On the basis of material used, it will be again of two types. Number one is external and second is internal. The material, that is the statements, is used by whom? Okay, that depends, external and internal. External analysis very much is for external users. The external users basically, okay, are those who do not have any access over the books of accounts. Do not have any access. They'll have to just to rely upon the information that has been published by the company. Okay. And this is done by whom? The external analysis basically is done by the equity shareholders, the preference shareholders, the debenture holders, maybe the financial institutions, the bankers, the creditors, the public depositors, trade unions, government, researchers, etc. So these all are our external users of financial statements, financial information. These people do not have any access over the books of accounts. They do not participate in any way to prepare the books of accounts. That is what is all about external analysis. They solely rely upon the published accounts, the director's report, the auditor's report, right? So they just have to rely upon the information that is reflected in the annual accounts. Next is internal analysis. Opposite to this, apart from external users, we have internal users as well. Internal में सबसे important part जो play करता है, that is the management. Okay, so this type of analysis is made by those who have access to the books of accounts and other information of the company. So it is basically conducted by the management. All other users were on the other side, external men. But over here, the management is one on the in this part, that is internal analysis. Now, why is management doing the analysis? So with a view to knowing the operational and the financial efficiency of the enterprise. Management की बात करेंगे तो efficiency की बात करेंगे. The management is also interested in using it for planning and controlling purpose. Okay, they need to have the comparison of the actual performance with the planned performance. That's why this information can be used for planning and controlling purposes. Next, on the basis of modus operandi, that is technique used. On the basis of financial statement analysis, on this basis basically, again there are two types, the two techniques are there. One is horizontal analysis and next one will be vertical analysis. Horizontal, in the next chapter we are going to learn something about comparative statement. Comparative, okay, and over here vertical mein we will have common size statement. The chapter name itself is comparative and common size statements, right? Horizontal analysis is also termed as dynamic analysis. Keeping in mind the one marker questions, you have to memorize the name. Next, the meaning. When an analyst analyzes the financial statements of an enterprise over a number of years, when you talk about more than 1 year, it is always going to be the horizontal or the dynamic analysis. The emphasis here is on change. What is the difference? We need to have a comparison of current year as to previous year or previous years, right? We need to have that comparison. So it is always emphasizing this method, okay, is always emphasizing on the change, not on status. Status, I'll let you know what do you mean by status. Status is something related to the percentage, okay, percentage of any single item in that particular statement. What is the percentage of, like the other incomes? What is the percentage of the financial cost? What is the percentage of the depreciation and amortization, like that? In this part, that is horizontal analysis, we talk about the change and not the status. The second part jab aayega vertical mein it will be on status, not on change. Next is financial data of several years is compared, and that's why we have comparative statements, right? With a selected base year to study the weakness, the profitability, and the financial strength of the business. It includes the tools, various tools like the comparative statement. That is what I told you. We are going to learn the numerical part of this in the next chapter. We have ratio analysis, we have cash flow, we have fund flow statement. These are the various tools of horizontal analysis. This type of analysis is useful on knowing the trend of the business. The trend is increasing or decreasing in regards to profits. Maybe like the decreasing trend in regards to cost of goods sold. So the trend can be known with the help of this horizontal analysis because the data is available to us of more than 1 year. The technique of analysis, that is horizontal, is also called dynamic. The reason is very clear because the data of more than 1 year is used over here, right? So all these highlighted points are, like keeping in mind the one marker questions every time. This is what is about horizontal. Next is vertical or static analysis. Ab yahan par the data available will be for single year. Okay, uses only single set of financial statements. Another important point is the emphasis over here in this analysis is on status and not on change. We are not going to have the comparison. I just want to know the percentage of cost of goods sold to my sales, percentage of, say for example, fixed assets to the total assets, percentage of share capital to the total of balance sheet. Okay, so every time each and every single item will be calculated in terms of percentage, right over here. So we come to know about the status of each and every single item in any other statement, basically either income statement or balance sheet statement, but we will never focus on the change over here. Next, it involves the analytical tools like common size statement. I told you we are going to learn two statements, comparative and common size. Comparative is horizontal and common size is vertical. Next, normally such an analysis is useful for making comparison of performance of several enterprises in the same industry or divisions in the same enterprise. whenever like I want to compare, suppose it's a multinational company dealing with the various products, right? तो अगर अलग अलग products हैं तो I would like to know the percentage of the net profit from garment industry कितना है, steel industry कितना है, या oil industry कितना है. तो अगर तीनों अलग अलग sections हैं, मेरे पास segments हैं, तो I would like to know and compare. And the comparison is required. The reason is very clear. If any of the segment is not performing well, so that can be discarded, right? That can be winded up. Okay. And जो अच्छा करे तो उसमें और investment करके उसको और ज़्यादा बढ़ाने की बात हो सकती है. So all these tools are very very useful, right? The horizontal, vertical, internal, external. 4 type of analysis we have gone through. And it involves the study of quantitative relationship among the various items of income statement and balance sheet of a single year. Please remember single year. And because a single year data is used, it is also called as static analysis. So we are done with the 4 analysis: external, internal, and then we had horizontal and vertical. Now let us go to the difference between. Very easy to understand the difference between the horizontal and the vertical analysis. Number 1, period. How many years information is used? In case of horizontal, we know like it is 2 or more years data, and in vertical it is 1 year data only. Next is items. In case of horizontal analysis, we have the comparison over the number of years. So it has to be the same item over the number of years. But when you talk about the vertical analysis, it is different items of the same period, right? 1 year data only. Next, utility, where it is used. Horizontal analysis is used for making the time series analysis, whereas vertical is used for cross-sectional analysis, that is segment reporting and all. Next, nature of analysis. Horizontal is better known as dynamic and vertical is known as static analysis. Information. The information in horizontal analysis may be provided in the money form or in the percentage form, whereas in vertical analysis it may be in the percentage or the ratio form. That's all for the difference between. Next is difference between intra-firm and inter-firm analysis. Can you tell me what is intra-firm and inter-firm? Anybody?
Interfirm comparison means the comparison, the analysis, which means the analysis with other firms in the same type of business or profession. And intra-firm means comparison with your
with own
firm, but over different years.
Different years. That's very correct. Intra is within the firm itself, and inter is within 2 different firms. Okay, so that's what is about the intra-firm and inter-firm analysis. Let us go to the meaning of this. Intra-firm analysis, if the different financial variables of a single firm, intra-firm की बात करें, intra तो single firm ही होगा, are analyzed and compared over a period of time. As I have been telling you again and again, कि जब vertical analysis करते हैं तो I would like to know the percentage of gross profit, the net profit, the operating ratio. अगर मुझे वो सब पता करना है तो current year का suppose operating ratio is around 80%. I would like to know कि last year कितना था, उसके last year कितना था. So that is just one item over a number of years. So that is what is about intra-firm analysis, right? So it is also called the time series analysis or the trend analysis. Next one is inter-firm analysis. Inter-firm analysis basically talks about the comparison of 2 or more business firms, maybe in the same industry, right? So if single set of financial statements of 2 or more firms are compared, okay, that is, we call it as cross-section analysis. Okay, inter-firm and intra-firm. Next is objectives. Objectives of financial statement analysis. What is the need? What is the need to do the analysis of financial statements? Number 1 is about to know the earning capacity or profitability. To know the earning capacity or profitability, it's very, very easy, and this is the main reason of preparing the statements also. I just want to know the profitability position too, because it is an indicator of efficiency and success of a business enterprise. if I just see that the profit earning capacity, okay, is increasing, so yes, that indicates the efficiency of the management, efficiency of the company, and every investor would like to invest in the same company. So that is one thing. Second is, all the external end users of financial statements, including the investors and the potential investors, are also interested in knowing the earning capacity of the business. Okay, apart from the management, इनको भी जरूरत है. And also like जो investors हैं, okay, either the present investors जो shareholders हैं या potential investors हैं, they may also focus the future earning capacity. कि it has been showing a trend of increasing trend है, profit is increasing day by day. तो yes, it may be expected that कि focus कर सकते हैं कि future में इनका performance बहुत अच्छा ही रहेगा, and accordingly they can decide about the company, like whether to continue the same company or not, or whether to leave the company and try for the better prospects. Next is to know the solvency position. Okay, in ratios we are going to learn something about the solvency ratios. Solvency ratios may be short term, may be long term. So if I want to know the solvency position of the company, so I would be depending on the ratios, and the ratios can be calculated only if I have some information with me. This is a point over here. Solvency of an enterprise refers to ability of an enterprise to pay back its short-term and long-term liabilities well in time. Okay, to know about the long-term, who is interested? Long-term, debenture holders, lenders are interested in long-term solvency, whereas trade creditors are interested in the short-term solvency. Okay, now to know the long-term solvency, which ratios will help them? The debt equity ratio, propriety ratio will help them to know the long-term solvency position of the company, whereas for short-term they may rely upon the current ratio and the liquid ratio. Okay, next, to know about the managerial efficiency, again I need to do the analysis of the financial statements. So the analysis of financial statement has the ability to point out the areas of efficiency and inefficiency of the management. So for example, like the operating ratio is there, the expense ratio is there, the turnover ratios, and we have stock turnover ratio, we have debtors turnover ratio, we have creditors turnover ratio, okay, and we have working capital turnover ratio as well. Okay, so different ratios are there, okay, so these ratios will definitely let us know about the efficiency of the management. Say for example, debtors turnover ratio tells us within how many days we are able to collect the amount from the debtors. Okay, if that is less in number, it is really good. That shows management is efficient in collecting the amount from the debtors. Stock turnover ratio, more the ratio, it is so good, right? So it shows the efficiency of the management that whatever the stock is ready for the sale, the management has been efficient enough to sell the goods and realize the money therefrom. So this is how these ratios will definitely help us to know the efficiency of the management. Next, facilitates inter-firm comparison. Inter-firm comparison we all have gone through. Let us read this. So we can analyze and compare the financial statements of similar enterprises with our own enterprise. That is inter-firm comparison. And again, inter-firm comparison facilitates the area of efficiency and inefficiency of our own enterprise. We just come to know our own loopholes. Like अगर हम अच्छा भी करें तो भी ठीक है, खराब करें तो भी ठीक है. If we don't compare, we don't grow. If I have to ensure my growth, I need to have the comparison. Okay. Next, facilitates intra-firm comparison. With the help of the analysis, even that is also possible. We can analyze the financial statements over a period of time and come to know our loopholes, like the pinpoints, efficiency and inefficiency of the enterprise over the period of years. Next is facilitates preparation of budgets. When you do the analysis, okay, it helps us to prepare the various budgets. Budget is not restricted to just cash budget, okay. It may be related to sales, it may be related to expenses, it may be expenses may be अलग-अलग expenses हो सकते हैं. It may be like the fixed expenses, the variable expenses, the admin expenses, the selling expenses. So many budgets can be prepared. Okay, so with the help of analysis, okay, analysis of intra-firm comparison of past financial statements are the basis for preparing budgets. Next, to know the financial strength. If I just want to know the financial strength of a company, so I would like to answer some questions over here. Let us see those questions first of all. The question is whether funds required for modernization and expansion will the funds be available from the internal source or not? अगर internal source से funds पैसा available है, we can say the company is financially very sound. ठीक है? If not available from the internal sources, then what? How much funds can be raised from the external sources on the basis of the goodwill? Every firm is enjoying some other the reputation in the market. So अगर आपका goodwill अच्छा होगा, then only it will be easy for you to raise the funds from the market. So if you just want to have the analysis of the financial strength, you need to have these questions in your mind. Ki whether the funds are available for expansion, for modernization through internal sources or not. And second, as and when the funds are required, is the company able to raise the funds from the market easily because of the goodwill? Yes, if yes, then we can say that the company is having a good financial strength. Next is to know the capability of payment of interest and dividend. Even this is also one of the point of analysis. By analyzing the financial statements, we can know about the capability of the company to pay interest in time and capacity to pay the dividend also. Whenever you talk about dividend, the shareholders do expect a dividend at a higher rate. Okay?